Mike Tedeschi, Portfolio Manager at Perspective Wealth Planning, with this week's market breakdown video. It's a holiday shortened trading week. We're going to take a look at the four major U.S. indexes. We'll jump in, take a look at the dollar. We'll look at commodities. And we got to pay very close attention to the bond market, as we talked about the importance of that recently. We'll check that out as well. Let's jump right into it here. First and foremost, S&P 500 has slid for the week. I have the daily chart up right now. The key level is really this 4,400 zone, and we can see the importance of this from the failed break higher in the beginning of March that led to the pullback, and then when we finally broke through it, now it's starting to act as support. If we lose that 4,400 level, we really don't have much of anything until we fall back towards that 4,100 level. If we take a look in at the weekly chart, we had two really solid moves higher. Then we had an indecision week, and we have slid for 2 weeks, and this is still in the context of making potentially lower highs there on a weekly time frame. So market really is at an important level. It needs to kind of hold that 4,400. I'm filming this in the middle of the day on Thursday, so it's not quite the weekly close candles. But we really want to make sure that we hold over that level into the end of the day today. The NASDAQ, a lot weaker, and you can see the importance from its bounce in March. It was right around that 14,300 level. We're clearly underneath of that. So we have had a couple of big gaps lower this week. We take a look at the weekly chart, right? Gap down and has fallen for the majority of the week. And there really isn't much support until we fall back down towards that 13,000 key level that we put in a couple of weeks back where we had our nice bounce from. So really, really important area to hold the low of this week. But this does not really look very strong at all at the moment. Now the Russell failed breakout over at 2,100. We've talked about that a lot. This week, actually, it's been stronger for a couple of days. We'll take a look at that weekly candle. It's actually green for the week. So that is a decent sign. Again, I've talked extensively about how I think that the 1900 key level to hold on the Russell is super, super important. If we break below that, that is a very clear risk-off sign. And so the Russell being green this week is a lot better. Now, the Dow, if we take a look in here, right, we'll look at this on a weekly time frame as well. Almost green on the week. 3 very tight weekly closes. Yes, we've had a little bit of up and down, but all 3 of the weeks essentially open and close basically right at the same spot. The bears haven't been able to drive the Dow down nearly the same way that they have done the NASDAQ. So this has held up much, much better and does look a lot better. And we have a key level that we have clearly held above, and that's 34,000. You can see the importance from back in December, in January. You can see the importance again from a resistance standpoint in March. Then we get back up above it, and it's acting as support at this point in time. So the Dow is the best looking of the charts at the moment from the major indexes. That 34,000 level is the key that we need to pay attention to. Now, let's jump in and take a look at the U.S. dollar. The U.S. dollar has clearly broken out. We are now over 100. We have seen one of the better bullish patterns, and that is box on top of box on top of box on top of box. The way you can kind of think about this, it's stair-stepping its way higher. It's a very powerful chart pattern, and it's back up over that key level from back in 2020. Now, we've got a little bit more resistance at 101, and then really all you have is that big couple of days spike in the midst of the pandemic. If you ignore those couple of days, really a close over about 101 gives you a multi-year breakout. All right, and then you're looking all the way back to 2016 at that 104, and I'm going to back this chart out to a monthly basis. We don't really have anything over 104 going back 20 years until that level becomes important on the chart once again back in 2002 and 2003. So this is a really important breakout that's happening here. It's kind of that flight to safety. And when we look at commodities as a whole, a strong dollar is a headwind because commodities are priced in the U.S. dollar, but gold actually acted pretty well this week in the face of a rising dollar. It's up over that 1960 zone. We look at this in on a weekly candle, pushing back up towards the highest weekly close in a year or so. Just a little bit higher, about 10-15 points is what it needs in order to get above there. But you can see a very tight trading range for a couple of weeks, and now starting to make that push higher. So gold does look pretty good. Not all the metals look the same though. Silver does act well. It's back up near 26. If we look at this on a weekly time frame, it's a good solid weekly candle. We need to see it up over really 26.5 to get that highest weekly close in a while. But when we look in at platinum, platinum is still below that 1,000 zone. It has not acted nearly as well. And palladium, which we know we had this incredible spike because Russia's a large supplier of palladium, and there was supply concerns, came all the way back down, and now it's just kind of trading in the middle of this zone. I want to put a line on this chart. If you look back over the last 2-3 years, this is the middle of the zone right here. We had a 6-month period of time where we only traded basically right around that zone. It was really important going back to 2020 and 2019. So what happens here is really important. I think a move over 2,500 is pretty good. If we can't get up over that 2,400, you're probably headed back towards that 2,000. But this is just a very, very messy and difficult chart to trade. We come in and we take a look at the energy space. Oil held where it needed to hold. All right. So we've talked about this extensively, that 94, 95-ish zone. We had the breakout from it. We came back, tested it, made a nice bounce, right? And then rolled back over and tested it one more time. It held. And this week we had a strong bounce, and that's with reserve supplies being dumped into the market by the U.S. government, trying to keep the price of gas and oil lower. Didn't really work so well this week. We take a look at it on a weekly time frame. It's doing exactly what it needs to do from a bullish standpoint. And one of the ways that you can kind of look at this is that bull flag in an uptrend. So watch over 110 for that continued push. Right? There's still a lot of work that has to be done. There's still a bunch of overhead supply from the shock with Ukraine and Russia, again, really up in this zone. So what happens in oil next week is going to be really important. We'll jump in next. We'll take a look at gas. Gas has held the psychological $3 level, pushed back up. $3.50 is really the key. We'll back this up on a monthly time frame. Look, close over really $3.50 is closing at all-time highs, right, on a monthly time frame. So let's really pay attention to this, because the other area of the energy space has gone absolutely crazy here over the last couple of weeks, and that is nat gas. And we talked a lot about this, and the spikes above 550 over the last decade, we're looking at a monthly chart at this point in time, right, have all been smacked down, and that happened this year, but we held the breakout from the middle of 2021 and rocketed higher. On pace for the highest monthly close since 2008. And again, there's not a whole lot of overhead resistance in on the nat gas chart. This is an explosive move higher. And it's just been up almost day over day over day over day for a while, clearly taking out last year's highs. So that's concerning from an energy pricing perspective, seeing nat gas making those kind of moves. Next, I want to touch base. I would like to touch base on crypto. So let's jump in and take a look in at Bitcoin. Bitcoin, not a solid week there. This has been trading very lock in step with the NASDAQ lately. The NASDAQ chart looks very, very similar to this over basically the last 4 months. The one positive that the bulls still have going for them here is there's still technically higher lows that are in play. So you could have this kind of look, but it's in the context of a 6-month downtrend. So a break below would actually be a negative. As I've said before, 28,000 is that key level. You lose 28,000, you lose this whole area of support. It would be very, very bad. Right now, this also could kind of be viewed at maybe as a potential triangle pattern there for a move back up. Bottom line, it's at an important zone. It's right at that psychological 40,000 level, and you can see the importance of that zone going back to last year. Right in here in this zone, and then in this year as well. It's been trading up and above and below that. So I'd watch that 40,000 level very, very closely here. Ethereum, 3,300 is the key breakout level. It's below that. It's a very similar looking chart to Bitcoin in the fact that you do have higher lows still put in over the course of the entire year. So this chart's not broken yet. But if you see more continued downside, that would be a pretty bad sign, because it also could be constructed and viewed as a potential bear flag in a 6-month downtrend. So what happens here in this zone is also really, really important. So we're keeping our eyes very closely in on this area. Now, the next area that we want to take a look at is bonds. Bonds have once again continued to slide lower. It looked like there might be a little bit of relief 2 days this week. We had a little bit of a bounce, potential, short-term bottom being put in, and today the slides continues once again. Bonds have been absolutely crushed, and the reason why we're paying so much close attention to this is that growth area of the market that relies on raising capital in order to keep operations going. Those money-losing, disrupting companies continue to be massively under pressure in terms of their valuations if interest rates are going to continue to rise. And that's what we're seeing here in this bond chart, because bonds trade inverse to interest rates. So as bonds go down, interest rates go up, the cost of borrowing money goes up, and that makes lower multiples in on the tech space. And if we look at one of the most important areas in the tech space, the semiconductors, they're sitting right there on major support. This is a very key level. We have not traded below it since July of last year, so this is coming close to those 52-week lows. Underneath of 420, you have some support at 380 from back in here. Below that, you're running into the risk of moving all the way back down to the coronavirus breakout area. Right? You can look at this, and I've seen people talk about this as that potential complex head and shoulders top, and this is a neckline. And if it does break below it, there is kind of that measured move lower that certainly could be in play. The other area of the market that's important to pay attention to is the transports. The transports came down and tested a major level as well. The one good thing that we got out of the market this week, transports held and started to move a little bit higher. Semiconductors are looking like they're going to close the week on that support. The transports are going to close above that zone of support. And again, I'm back this out to a weekly chart. You can really see the key importance of this zone right here. So we have a lot of key things to pay attention to. Holiday shortened trading week this week. Next week, we are definitely going to have to pay very close attention to a lot of these spaces, because there are certainly some major key levels in play. And the weekly closes on some of these areas of the market certainly have us a little bit concerned at the moment. As always, I hope you guys find this content useful. If you've got any questions, feel free to reach out to me at mtedeschi at perspectivewealthplanning.com, or you can give me a call at 814-580-9881. Hope you guys have yourselves a fantastic week. I'll see you next week.